Spotify Premium is the best way to upgrade your listening experience. Enjoy your music fully when you play songs in any order. Download them offline at higher quality and listen to them ad-free. It's what your ears deserve. Tap the banner to learn more. Spotify Premium is the best way to upgrade your listening experience. Enjoy your music.
I'm sorry I'm here for someone else, but it's good to see your face. And I really hope you're doing well. I hope you're doing well. She was running late for dinner outside of town. Left the phone a little bitter, but it's cool for now. Far from perfect for each other, but we're working it out, I suppose. Now I'm waiting at the diner looking traumatized, 'cause you walk up to the table with an order of fries. And I know you, yes I know you, used to love you. And I said, I'm sorry I'm here for someone
There are many
else.
different ways of structuring foreign investments. For example, a manufacturing enterprise might sell its goods in the foreign country in one or more of the foreign ways. Sell its manufactured goods directly to customers in the foreign country through, for example, mail order sales over the internet, or sales by container sales agents.
Itinerant. 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 Itinerant.
Itinerant sales agents. Sell its goods to an unrelated foreign distributor for resale to customers. Establish a branch in the foreign country, consisting of warehouse. Establish a branch in the foreign country consisting of a warehouse and sales employees or agents who sell its goods here. Establish a foreign sales subsidiaries in the foreign country to sell the goods. Establish a foreign holding company, which establishes a foreign sales subsidiary in the country to sell the goods, or license an unrelated foreign corporation to manufacture and sell its goods in the foreign country. The tax consequences of these various alternatives may vary considerably under the tax laws of a particular country and from country to country. One of the fundamental choices that a corporation resident in one country faces in structuring a foreign investment in another country is a choice between a foreign branch and a foreign subsidiary. One of the fundamental choices that a corporation resident in one country faces in structuring a foreign investment in another country is a choice between a foreign branch and foreign subsidiaries. The essential differences between a branch and subsidiary is a subsidiary is a separate legal and taxable entity. It's a separate legal and taxable entity, whereas a branch is a part of a division of the resident corporation. Whereas a branch is a part or division of the resident corporation. As a result, when a resident corporation carries on its business through a foreign branch, the resident corporation may be taxed on the profits of the branch, because the branch is not a legal entity separate from the corporation. Further, for general law purpose, the resident corporation is responsible for any legal obligations with respect to product defects. Arising out of these foreign business activities, in contrast, if the foreign activities are carried out by a foreign subsidiary corporation, that corporation as a separate legal entity is taxable on its profits, and is responsible for its own legal obligations. There are, of course, exceptions to this general rule. In summary, a tax advisor is expected to perform two functions with respect to tax planning for international transactions. In summary, a tax advisor is expected to perform two functions with respect to tax planning for international transactions. First, tax advisors must, within a reasonable range, quantify the tax costs and benefits of carrying out transactions and assess the tax risks of those tax costs and benefits. First, a tax advisor must, within a reasonable range, quantify the tax costs and benefits of carrying out transactions and assess the tax risks of those tax costs and benefits. Second, they are expected to provide advice for minimizing the amount of tax payable. Second, they are expected to provide advice for minimizing the amount of tax payable. Often, this tax minimization aspect of the international tax planning involves identifying various methods of structuring a transaction and recommending one method over others in light of the tax consequences and the compatibility of the proposed structure with the overall operating plan of the enterprise. In summary, a tax advisor is expected to perform two functions with respect to tax planning for international transactions. First, tax advisors must, within a reasonable range, quantify the tax costs and benefits of carrying out transactions and assess the tax risks of those tax costs and benefits. Second, they are expected to provide advice for minimizing the amount of tax payable. often this tax minimization aspect of international tax planning involves identifying various methods of structuring a transaction and recommending one method over others in light of the tax consequences and the compatibility of the proposed structure with the overall operating plan of the enterprise. Although tax planning for international transactions must be tailored to each client's particular situation, certain common types of tax planning can be identified. Three types of international tax planning are described below to give some flavor of the nature of the exercise. Three types of international tax planning described below to give some flavor of the nature of the exercise. The following examples have been simplified drastically. Double dip lease. Some cross-border transactions are structured to exploit differences in tax treaties. Leases. Double dip leases. Some cross-border transactions are structured to exploit
exploit.
Some cross-border transactions are structured to exploit differences in the tax treatment of transactions by two countries. Cross-border leasing provides an example of this type of international tax planning.
Double dip.
Assume that an airline company resident in country A wishes to acquire on credit new aircraft for using its business. It can take out a commercial loan and purchase the aircraft directly, or it can acquire the aircraft by utilizing so-called financial lease. 金融租赁 financial lease. In general, financial lease is a financing arrangement under which the lessee acquires substantially all ownership rights to the leased property. In fact, the lessor
Lessee. Lessor.
Lessor. Lessor. Lessee. Which the lessee acquires substantially all ownership rights to the leased property. In fact, the lessor sells its ownership rights in the property and finances the acquisition of the property by the lease. Ownership rights in the property and finances all the acquisition of the property by the lessee. Instead of receiving interest and repayments of a principal as a conventional lender would, the lessor receives rental payments that reflect both the sales price of the property and the financing aspect of the transaction. Assume that an airline company resident in country A wishes to acquire on credit new aircraft for use in its business. You can take out a commercial loan and purchase the aircraft directly, or you can acquire the aircraft by utilizing a so-called financial lease. In general, a financial lease is a financing arrangement. A financial lease is a financing arrangement. It's a financing arrangement under which the lessee acquires substantially all ownership rights to the leased property. In effect, the lessor sells its ownership rights in the property and finances the acquisition of the property by the lessee. Instead of receiving interest and repayments of a principal as a conventional lender would, the lessor receives rental payments that reflect both the sales price of the property and the financing aspect of the transaction. Assumes that under the tax law of a country A, a financial lease is treated as a sale. Treated as a sale. Accordingly, if the airline company resident in country A leases the aircraft, it will be treated as the owner of the aircraft for purpose of country A's tax, and will be entitled to deduct depreciation in respect to the aircraft and the interest element of the lease payments. The depreciation deductions may be quite large, since many countries provide accelerated depreciation deductions as a tax incentive for investments in substantial equipment. The airline company will also be permitted to claim any investment tax credit that country A provides for purchase of aircraft. If the lessor is also a resident of country A, it will be treated as having sold the aircraft with appropriate gain or loss recognized on the sales on the sale and interest element of these payments included in its income assume. However, the lessor is a resident of country B, which treats financial leases for tax purpose as genuine leases. Under this assumption, the lessor will be treated as the owner. The lessor will be treated as the owner of the aircraft by country B and will be entitled to take depreciation deductions and claim any investment tax credits offered by country B to owners of aircraft. The lessor will be taxable in country B on the payments of rent received from the airline company. However, country A treats the financial lease as a sale so that the airline company is considered to be the owner of the aircraft. Thus, the payments that are considered to be rent by country B will be treated as payments of the purchase price and interest by country A. This type of structure is often referred to as double-dip lease because the tax benefits of ownership of the aircraft are claimed in both countries by the airline company in country A and by the lessor in country B as a result of the inconsistent characterization of the transaction by the two countries. Tax haven entities. International tax planning focuses heavily on the use of countries that levy little or no tax. Such tax havens can be used in a wide variety of ways to reduce taxes of residents of high tax countries. One common way is to establish a controlled foreign corporation in a tax haven.
And I watch you run away now from all the lovely things we hate now. Where did we go? Where did we go? I don't.
Haven.
Feels like somewhere far away from home, and it's falling into pieces. No, there's not a way that we can stop this now. 1,000 miles an hour driving off the edge, and darling, now there's nothing left. Somewhere deep in you, somewhere deep in me. Oh, there's still two lovers. So who the hell are we? When I look at you, and when you look at me. Oh, there's still two lovers. So who the hell are we? When I look at you, and when you look at me. Oh, there's still two lovers. So who the hell are we? alive again.
用恒生 Enjoy 卡專享優惠日常餐飲禮遇，星期1至日日精彩，星期2嚟披薩克低先800折，借定唔借揾得到先嘅啫。
舒適達科研級亮白抗敏牙膏，5大臨床實證係專為敏感。
Hello and welcome to this session in which we will discuss the difference between finance lease and operating lease. Finance lease, sometimes called a capital lease. Now, before we proceed, I would like to remind you what we did in the prior session. We talked about what is a lease, advantages of leasing, and the players in the leasing industry. Now we're going to look at what is a finance or operating lease. Regardless, whether a company classify a lease as a finance lease or as an operating lease, in both situations, leases are capitalized. Now, why am I saying this? Because in the past, and hopefully you don't remember this because this was maybe a few years ago, the old rules, under operating lease, you did not have to capitalize the lease. But what does capitalize mean? It means every time you have a lease, you have to put an asset on the book and a corresponding liability. Well, based on the old rules, which is you don't have to worry about, but the reason I'm giving you the old rules because it's going to help you in understanding why we do certain things. Based on the old rules, if the lease was an operating lease, you did not have to have an asset and a liability, if that was the case. Now, you have to have an asset and a liability, whether you have a finance lease or an operating lease. Now, why would that be important? Because companies would try everything to do to classify the lease as an operating lease. This way, they don't have to put the liability or the asset. Now, they like the asset, but they don't like the liability. So they prefer to keep both out. That's not an option anymore. All leases now are capitalized. Also, I'm going to start by talking from a lessee's perspective, from the renter. And we'll talk about the lessor later. Whether we have a finance or an operating lease, and we're going to see the rules shortly. Here's what you need to know. For a finance lease, the lessee will have two expenses. They will have an expense called interest expense. Obviously, a lease is like a loan. You're going to have to incur interest expense on the lease, and you're going to be using the effective interest rate method. So the effective interest rate method, that's one expense. The second expense is once you have an asset, you're going to depreciate. You're going to amortize the asset on the right to use using the straight line method. So you're going to have two separate expenses. For operating leases, you're going to have one expense, and you're going to recognize interest expense. Again, you have a liability. You have to recognize interest expense, and you're going to amortize the right of use asset. However, both of these expenses will be showing in one expense called total lease expense, and it's going to be the same from period to period. So notice, we have technically here under operating lease two expenses, but we show them as one expense. Under finance lease, we're going to have two expenses. Just make sure you're aware of this when we start to work with actual examples. So how do we classify a lease? Whether it's an operating lease or a finance lease, because that's the purpose of the session. Well, we're going to look at substance over form. We don't care what's in the agreement. We're going to look at the substance of the agreement. If the arrangement is effectively a purchase of the underlying asset, then we have a finance lease. So if the agreement technically gives purchase the asset rather than rent the asset, then we have a lease. How do we know that we purchased the asset? There's a transfer of control or ownership. How do we know that we have a transfer of control or ownership? Well, simply put, the lessee takes ownership of the asset. Basically, they take it, they keep it, or they consume the substantial portion of the underlying asset. If they don't take ownership of it, they used it. They used most of it. Like basically the asset. No longer useful for someone else or for the asset life, technically they use all its life, all its economic life. Well, if not, if we don't take control or ownership of the asset, then we have an operating lease. Again, we look at substance over form. Now, we have to be a little bit more specific. I have not answered the question. I'm just telling you, what do we do, whether we have an operating lease or a finance lease? Well, we're going to look at condition. Actually, it's one condition, or it could be many conditions, but you just need one condition to have a finance lease. If you have a finance lease, then it's a finance lease. If it's not a finance lease, it's going to be an operating lease. Now, what are those condition or conditions? You just need one. Before we look at the conditions, most likely you are an accounting student or a CPA candidate if you're listening to my lectures, which is great. You have arrived. I can help you. Visit farhablectures.com. I have. So what are the conditions that will help us determine whether a lease is a finance lease? Well, the first thing we have to have is an agreement between the two parties, and that agreement cannot be cancelable. And if it's cancelable, there's a large penalty. But simply put, we have a legitimate agreement. And we must meet one of 5 conditions, or what we call tests. Remember, only one. So what are those tests or those conditions that we need to be aware of? First condition, transfer of ownership test.
Shell App 內綁定 U Double 賺分 ，U 分再換 Shell 現金券，入油消費，節完再減。
The winner of the San Pellegrino Yacht Chef Academy is Hardy Ferguson.
What does that mean? We have to ask ourselves, after the lease end, do we transfer the asset to the lessee by the end of the term? So once this is over, would the lessee, would the renter take ownership? If the answer is no, if the answer is yes, we have a finance lease. If the answer is no, we don't have a finance lease. Think if you rent an apartment. If you rent an apartment, after 1, 2, 3 years, the ownership goes back to the owner. You don't own it. Versus sometime when you lease a car, at the end of its life, although it's a lease, they will give you the keys because he basically paid all of it. So is there a transfer of ownership? And let's assume we have an agreement and there's no transfer of ownership. Well,
架构所就刚刚咱们说的后面一个一个的漏洞就行了，就让它慢慢的。I'm always looking for new tools and ways to improve my workflow. I recently switched to Claude Code, and today I'm going to share practical tips to get the most out of Claude Code. If you're not familiar, it is basically a coding aid.
Intermediaries.
Intermediaries. Financial intermediaries located within your borders. Switzerland. This is its emission of banks and the adoption of common international standards. Exchange of information between tax authorities. On request and automatically listed. The significant improvements in exchange of information between tax authorities. Prevent tax avoidance and evasion are discussed separately. Treaty shopping. Another type of international tax law involves the use of treaties. Another type of international tax law involves the use of tax rates to reduce tax. A common example involves the establishment by a government of one country of conduit. Conducting another country in order to take advantage of that country's tax trading network. Another example involves establishment by residents of one country. One country example involves the establishment by a resident of one country. By equal, rather than country has developed relevant, intangible value. Country has developed relevant, intangible value when it comes to license appropriate for use by manufacturers in several other countries. Country does not have treaties with some of the countries where the potential licenses are resident. And the treaties that country has with another country provide for the withholding tax on royalties of 50%. Country provides an incentive for dividends received by a corporation resident country from foreign corporation based in the corporation of the establishment of participation. Legal transfers, intangible transfers. Legal transfers is intangible property to a wholly owned subsidiary vehicle. Established in country B. Country B has tax treaties with all the countries where potential licenses are resident. And those treaties provide an exemption from any withholding tax on royalties. Assume that the equal resident in country A, equal resident in country Things on the long-term business. Resident in country has developed a valuable intangible property and eventually licensed property for use by manufacturers. Licensed for use by manufacturers in several other countries. Countries that not have treaties with some of the countries where the potential licenses are resident. And the treaties that country has with the other countries provide for withholding taxes on royalties self-regulation. Country provides protection for dividends received by a corporation. Dividends received by a corporation resident in country from foreign corporations in which the resident corporation has a substantial participation. Country provides an exemption for dividends received by a corporation resident in country from foreign corporations in which the resident corporation has a substantial participation. Legal transfer is determined to a wholly owned subsidiary vehicle established in country B. Country B has treated in all countries where potential licenses are resident. And those treaties provide exemption from any withholding tax on royalties. The result of the above arrangement is that no tax will be imposed on the royalties by the countries where the royalties arise. Country B may not tax the royalties derived from vehicle only taxed on a low rate, either because it is a traditional tax haven or because it provides a special low tax regime. special rights within royalties in respect of intangible property. The vehicle distributes dividends to equal contributing no tax on dividends because of this participation exemption for dividends from foreign companies. Even if country treats the transfer of intangible property by equal to vehicle as taxable transaction, it may have significant difficulty in taxing the appropriate amount obtained on the transfer because of the problem of accurately establishing the fair market value of the intangible property at the time of the transfer. This example illustrates the problem of treaty shopping. In fact, ECO has taken advantage of the country's biggest treaty network by the simple expedient of establishing a corporation as a resident of ECO. ECO functions as a conduit to convert the royalties from the license into tax exempt dividends paid to ECO. It may have no employees and no place of business in country B. The whole artifact of permission is withholding taxes of the countries in which the royalties arise avoided. Treaty shopping is still dealt with. Treaty shopping is dealt with in Chapter 8 section. International relations involving international tax. Also, sovereign nation states are probably responsible for accepting use of the international tax system through domestic legislation and tax treaties. Other international organizations play an important role with respect to international tax. The four major international organizations involving international tax. Four major international organizations, including the International Tax OECD, the International Money, OECD, IMF, International Monetary Fund, 国际货币基金组织，国际货币基金组织，基金，国际货币。International Monetary Fund. International Monetary Fund. The fund works to achieve substantial growth and prosperity for all of its member countries. It does not so supporting economic growth is that promote financial stability and monetary cooperation, which are essential to increase productivity, job creation, and economic well-being. The IMF government is governed by and accountable to its member countries. The IMF has three critical missions: furthering international monetary cooperation, encouraging the expansion of trade and economic growth, and discouraging policies that would harm prosperity. To fulfill these missions, IMF member countries work collaboratively with each other with other international bodies. Obligations per country. China's People's Republic of 中国遗产。 잠깐만요. Look. Twin Towers 双座的阿戈比12Twin Towers 在哪儿？国际呼吸北京双子大厦。北京双子大厦。CBD。这个啥？这个按来不动的，牛逼！
Consensus.
Secretariat.
Working partisan when their error and the errors of responsibility. Ruling party number 1, ruling party number 2, ruling party number 6. Question model trading and avoiding trade issues. Task organizing sales. Multinational enterprise and transfer pricing. Transfer pricing. Consumption taxes, exchange of US provision, tax compliance, overseas, international tax planning. So, member observer status. Anniversary, participating in the work of the OECD working parties on that basis. OECD Center for Tax Policy and Administration also plays a leading role in other national tax initiatives, studies in well beyond OECD member countries. These initiatives include loans to specific international taxation and participation in these forums is available to all countries that are prepared to meet their committed to objectives of the forum. To global forum on transparency and exchange of information for tax purposes has over 150 member countries. Its work involves ensuring that member countries respectively implement international standards. Its work involves ensuring that member countries effectively implement international standards for exchange of information through peer reviews of the domestic laws and administrative practices of member countries. Group of 20, G20. The group of 20 nations and OECD began a joint project aimed to implement preventing EPS. The OECD will lead this action plan on base euro and 税基期适合利润转移 base euro and profit shifting. Base euro and profit shifting. It set out ambitious and spending simplification items. The final report for hopefully out of the ECO on harmful tax practices responsible for ensuring that OECD member and non-member countries eliminate their harmful tax practices in accordance with the base euro and profit shifting. Action 5, financial.不是OECD。 Association for Economic Cooperation and Development. 经合组织，经济合作组织。说这个吧。Chapter 2，咱们看10岁。看7，真的。